What's going on, everybody? My name is Romayo Darius. Today, we'll be doing a review of the market this week. We have a pretty short week because of Memorial Day. And, as we discussed, we're possibly going to have a big dip in the middle of June. We got a lot on the economic calendar. So one thing that we did see as far as trying to hit that 4,300, right? SPX, which is about 4,300 in the SPX 500. In the ETF, that would be about 430. So 425 till about 430. So that's what we're going to watch out for. Second thing, we did see a rotation back in tech and momentum stocks. So we did see like EMC, we see like GameStop, all the meme stocks, Palantir, Junior Technologies, Plug. We did see momentum actually came back within those stocks as well. So we're going to be going over them at the end of the video. Right now, one thing to kind of watch out for, potentially, we don't know when it's going to happen. Usually in the beginning of the month, we actually had a move higher. So we're expecting a big dip by the 15th of July until the beginning of July. I mean, the 15th of June until the beginning of July, possibly. So we're basically going to go over a couple of things. First, we're going to go over the weekly SPX chart. We're going to check out heat map, FinViz. All the links will be provided below in the video. We're going to go over a little bit of the option chain. Then we're going to check out Bloomberg to go over like the global market. So basically the European DAX market, the biggest market in Europe. The Nikkei index, biggest market in the Asian markets, just to kind of see how they've been performing year to date on a weekly and a monthly basis. Then we're going to go over the economic calendar, right? One of the most important things to pay attention to as these inflation data are coming out. We need to keep track of them so we can make better trades. We're also going to have an ETF review. First off, let's actually go over the let me just show you guys the seasonality chart of what we've been looking at, so we could really pay attention to it. Let's see, bear with me. Hope everybody enjoyed the Memorial weekend and literally just getting ready to trade. Easy trading. And one of the things that we do at MarketRushTrading right now, and if you guys want to join our group and the system that we follow, please just click in the link under the video. Click on the link under the video. And you guys will be able to join our group, see how we trade, the information that we have a tons of information in our chat, just kind of help you become a better trader, become a better investor, and along with so many different other strategies. So right now, what did we see? First off, let's annotate real quick. This is the dip in March 2020. We had a nice rally to the upside. This is us in May. We kind of create like a little double bottom. And now we're inching higher. So around like the 420 area. Usually from May, right, we actually test new highs, right? We test new highs and then come back down a little dip, test it again, have a nice little dip, but not too much of a dip, right? Rally back, touch it up again, create some sort of a double top. Then by mid-June, we get a nice little dive, which possibly could bring us to about 397, 385 rather. Worst case scenario, 365 out of that double bottom back in September and October double bottom, right? But 400, 395, right? This is what this dip might do to us right now, bring us back to. So this is what we're watching for. I just wanted to show you guys this first so you guys could see exactly what I'm talking about, right? Exactly what I'm talking about. So let's get into it right away. Let's go back to TD Ameritrade and we'll actually go back to TradingView. This is actually, let's see, let's throw in some of the 1 second. All right, so now we're about to do a deep review of the SPX. Right now we're a little bit overextended, right? So you got to pay attention for a nice pullback in the SPX, right? So we're literally touching the other half of that linear regression. So this should be a nice reversal pattern if we do break this level here, which is 40.56, right? 40.56. We could be touching back to the median here. So we might be looking at something like this over here, right? But of course, right now we're actually on a bullish stance. Let's actually make this red. So when this does happen, we can have such, we knew that we did this, right? We always want to start on the weekly time frame just to kind of see what's actually going on. So this is what we have right now. We do have the RSI at overbought levels on the weekly. So this is the first week and the first month of a new trading month, right? If that makes sense. So we're basically going to see if we actually can go higher. So can we break above the 42.38 levels and go much higher, right? Which I think we are pre-market trading with the futures right now. So we're basically looking to see if we get a nice little bounce here. This could be the dip that we're waiting for. It might not be a 10, 15, 20% correction, but it could be a nice dip to that 3,700 level, right? That 3,700 level would put us at a nice, 5, 6, 7% drop on the SPX. One thing to note that's notable to us right now is the MACD, right? We're looking at the MACD right across the signal line. This is the first bearish stance we're going to look at, right? And we have a fadeaway in volume. So that's telling us right now, it might not be true, but once we start seeing some value, some red bars coming in, you can see that, okay, a reversal is about to happen. Also, the CCI as well has been trending down as of lately. So we could kind of see, okay, if we do have this pullback, we're going to start seeing the MACD crossover, possibly come back to these levels here, or possibly on top above the center midpoint line, right? So this is what we have right now. If you guys actually look at the SPX, SPY ETF, pretty much same thing, right? Pretty much the same thing. This is the ETF itself. And if you guys want to track each sector by itself, you guys can do that as well. Just open this up a little bit so you guys could actually see. I actually like to draw a lot of things on my chart. It's not that confusing to me. Again, if you guys want to know what I'm using, I'm only using the linear regression 50 just to kind of see if we're staying above the median, lower bottom, the top bottom, right? The bottom part of the linear regression, the top bottom, and the median line. It's sort of like the pitchfork, right? Just to kind of see reversal trends and how many standard deviation are we away, right? And how much can we come back to? So this is literally what I'm using right now. I don't like using the actual volume thing, so I use this just to kind of track it. It's the volume average thing on TD Ameritrade. Really, really, really dope. Yeah, right now, man, SPY has actually been struggling to break higher for the past couple of weeks, but we've been, staying above that 420. When we got to pass by 422.82, 423 the high, and we're looking to see if we could actually test back. So far, very, very bullish. We've been having bullish hammers. Red or green, those are very, very bullish hammers. Gonna need volume to back it up. Let's look out on a 4-hour chart just to kind of like pick the picture out a little bit. Right, we have a lot of nice rising wedge happening right now. A little nice double bottom, right, happening over here. So many different things, guys. So rising wedge, we might possibly head a little bit lower. So this is about the time that you start hedging your portfolio. Now, to keep things into perspective, you want to possibly look at the 11 different sectors under the S&P, right? You're talking about your real estate, utilities, materials, information technology, healthcare, financials, energy sector, and just kind of see the percentage change on a year-to-date basis, right? And these things have been crazy right now. So especially tech, energy, they've been up ridiculous. Look at the energy sector, right? Percentage change 60% for the year. right? So these things, they've been running really, really hot since the lows. Some people might want to be taking profit. This might be the time for you guys to take some profit, or use certain option strategies to actually capture some of the those gains if you don't want to get out your stock positions, right? But right now, if you actually bought in at the March lows, all up into this rally, you know, you have a better cost average than somebody who bought literally at the middle, the upper end of this of the run, right? So you might be in green right now. Within a couple of days, a week or so, you might be in the red. So it is very essential that you understand which sector, what are the top performing, the underperforming stocks, so that you can better position yourself, right? As I showed you guys, the seasonality chart, we're supposed to actually go higher at the beginning of June. So I'm possibly hoping for, let's see, a 30-minute chart. So we're possibly hoping for around 425, 430. Let's look at the full hour real quick. 425, 430. But we gotta break these levels first, right? Which is about the 423.50s, right? We gotta break these levels first, and see what's happened next. I don't know what's going to happen next. I feel like if we're unable to break that 423 level, we might be looking to actually head downward, right? We might looking to bounce off that median line, sort of like a pitchfork. This is a great area of rejection. But if we do break above 425, 426, which we actually will be going into the option chain, just to kind of show you guys, like, you know, what strikes they're playing. Are they bullish? Looking at the open interest, looking at the volume, right? So basically, we saw momentum coming in at the end of May, right? And I told you guys into tech, into momentum stock. So now we want to know exactly what's actually about to happen. So now let me show you guys a better picture over here on SPX. I think this will actually, matter of fact, I could just do SPY ETF just to keep it real simple. I already have it here. So this is what I traded on Friday. I actually traded the 420 puts. Made nice amount of money on it. I actually was on the live on Instagram trading them. You know, we got another rejection out here. This is a lower high formation, right? This is a higher low formation on lower high. This is a high. This is a lower high over here. So let's see if we actually could build up. We do have gaps to fill around the 415, 416 area. One of the things we did see on the option change into the middle of the week or 21 days away of the month, we're seeing them playing the 415 straddle, right? 415 calls, 415 puts, and the 420s as well. So this is a great area of rejection. We can see a lot of selling come over here, and we see this rapid growth to the upside over here. So this is the weekly. Matter of fact, let's look at the monthly chart. Right, this is the monthly chart. Shit, this is pretty bullish to me. Excuse me. This is pretty bullish to me so far. Take these out. We're going to redraw them again. And I'm going to try to keep this very, very short. This video very, very short. But just wanted you guys to see what's actually going on here. So this looks pretty bullish to me, to be honest with you, right? We might be looking for 423, 425. Can we actually hit 425, 430 this week? I don't know. We'll see. We need more volume to back that up. I have no idea, to be honest with you, right? Again, we got a nice little rejection here on the daily chart. So let's see if we come back into that red zone, fill in that gap, and then possibly go higher. Well, that gap should be filling around like 414 area, right? But this is that red zone area, the supply zone. If we come back to it, that might cause a big sell-off to complete this gap over here at 400, right? 396, 400. You're doing your moving averages, they should be around that area, right? Worst case scenario, 370. If you have the EMAs, that might be like a little bit higher, 380s. On the weekly, that's around like 365s. You know, worst case scenario on the 50-day. That's possibly where we might come down to. right? But we're looking pretty good. Hammer, hammer, nice close. We're gonna look to see if we could test that 423, that recent high that we just had. We do have a lot coming too. This upcoming week. We have a lot coming this upcoming week. In the upcoming month, we got Biden meeting with Putin. We got the Jay Powell speaking. That's the big homie. So far, everything looks pretty fine, right? This is the second weekly close that we've had, pretty strong to me. And this is the first monthly close. You know what I'm saying? So it looks pretty strong. So again, if we do have a pullback, if we all open under 415, 414, we might be looking to test back, 415 area. Then we close the gap at 400, 395, 400. So 393, 400, 385. Those are the three strikes that I'm looking at specifically. You want to look at your 50 and your 200 day just to kind of get an idea what's happening there. What else? SPY look fine, right? It looks fine. It's pretty bullish right now. Very, very, very bullish right now. So again, I'm going to leave those links. So right now, let's actually check a heat map on FinViz. This is the free website. You don't really have to pay for it. If you want to get better information, please do so. But if you're very, very good with information and know how to break it down, and you understand economics and all those great stuff, this is actually all you need is that heat map right there just to kind of see the performances of certain stocks during a certain period of time. Right now, this is the heat map. So we basically want to look at the weekly, the monthly, and the year-to-date. So let's actually start with the year-to-date. As we know, everything's supposed to be really green, because from the lows, everything has been running. The only thing, Apple, of course, Netflix still down about 7%. Apple, Amazon, Nike, a couple other stocks. Paycom is another one. Oof, ridiculous, right? We got, look at this. We got now certain stocks. So we seeing what's green and what's not. And we're gonna need tech to actually come back to lead the rally. And this could be after that first big dip, right? In the seasonality chart that I showed you guys that it might come. So that's basically possibly mid third quarter, beginning fourth quarter, right? Into the center rally, into the new year. The last month, how we've been performing, let's see, still red. Like you say, the $1 trillion market, they still red. The Microsoft, the Apple, the Google, Amazon, Tesla, like the big names, they're actually still a little bit iffy, right? Sideways, they're fading away a little bit. They're looking to come back. So let's pay attention to that. Again, Nvidia, one thing you got to pay attention to, they just announced a stock split. So very, very bullish. Very, very bullish. So we really got to pay attention to that. A couple other ones, AMD, QCOM, they had literally a nice little discount, but scale in properly, do your due diligence, understand the market structure, understand the fundamentals of the market, right? Each sector, even like on TD Ameritrade, on my Thinkorswim, I have the performances of each sector here. So I know like which sector has been performing crazy compared to those that has been lagging, right? So from that standpoint, I go within those sectors and look at those different companies and lay them out to see, well, this thing had a 300% gain or 50% gain for the year and it's still hot. And on that dip, technology usually are the biggest hit sectors under the S&P, right? So you might want to take a look at that. And that's kind of like what the heat map tells you on the year to date, right? Under each sector, technology, you get to see certain different stocks. You can put on the year to date percentage change, so you can kind of see that percentage change for the year, right? And if that did were to happen, or the last 6 months or last 3 months. If you're an active trader, you might want to look at the monthlies, the weeklies, the yearlies, 6 months, every 4 months, every 5 months, right? We need tech to come back to lead the rally. As we see Netflix, Tesla, QCOM, AMD, Apple, Paycom, they all down. Now, a lot of people have been buying the dip. That's fine. Scaling properly, because if you scale in the wrong way, you might be green for quite some time, and then boom, the drop happens, and you're looking to sell, and you panic selling right now. So just understand the market, And so you could better position yourself, you know, better position yourself. So next, let's actually go to the option chain and let's see what's up with this week. I love trading SPY, especially with profits money. Most of my profits money come from spreads anyway. I literally use a lot of money as collateral just to make a decent amount, which is about 5 to 6 thousand. These trades are 90% winning rate. So I don't really have to worry about it. So I'm talking about stocks like Amazon. I possibly will do something way out of the money, but it pays pretty well. But I'm making sure that Amazon 200 cushion, right? For Amazon to move $150 for the week, especially a week like this. Time decay, theta is my best friend, so I like to collect these premiums. But and based on that money, literally by Wednesday, Thursday, this week is short, so literally by Wednesday, time decay start kicking in really hard, right? Especially on stocks that you already own. Understand how to do covered calls, understand how to do credit puts, credit calls, diagonal spreads, calendar spreads, iron condor. All these things will really help you bring in income, right? While you're still investing in your long-term stocks, right? But you need that cash flow coming in. You need that cash flow coming in. So June 1st is going to be pretty crazy. So let's actually see what happened with that. Let's see what they actually played on the close of Friday. Let's see how those volume, those open entries were like on Friday. And then we're just gonna go throughout the whole week just to kind of see what the most open interest is at. So first thing first, let's look at this, the 420s. Okay, 421. Traded a lot, 63,000 volume. Most I see here is actually the 420 open interest. Decent volume as well. Nothing much here. Let's see the puts. Not a lot of open interest. So they're looking at the 420s, right? Sort of like a straddle maybe. 415 calls and puts. About the same thing. Not a lot of action. So people are very indecisive at that point. Let's check Wednesday. June 2nd. Let's check Wednesday. Okay, not much going on. Nope. 420s, not much action. Not much action at all. These were traded a lot last week, ending on the 28th. This is what they closed at. Let's check out Friday. I think Powell speaking on Thursday or Wednesday. We're gonna go over the economic data chart. Let me see, 420s. You getting some action here. This is sort of like a straddle, right? The 420s, look at that, 9,000 open interest, guys. 9,000 open interest. Want to look at this, right? This is the 420 puts. Open interest for the calls, 9 to 10,000. So this is most likely a straddle. You want to be careful with this. So these people are betting like right on the money. We close out about $1.96 the bid and about $1.99. What about the calls? 211, 208. So not bad. Look at the 415. Ooh. Okay. Some action coming in. So it's like we're leaning more towards the puts. Yeah, we have more open interest, but we have to pay attention to spreads, right? Easy way to collect some premiums for the week. Very easy way. So this might be a nice little spreads here. Do we actually go back to 415 or we probably stagnant, 416, 417 area and never actually touch it? And this person collect that entire premium of 78 cents, depending on when they entered. So if it was the beginning of the week, probably it was $1.20, so on and so forth. So just spreads a lot of straddles going on here, guys. So this is pretty interesting. Let's actually see 21 days. So let's actually click on June 18th and see what the option chain is based on the close on Friday, right? It's going to be pretty interesting for us to check 420s. Let's look at that. Oh, we got some big numbers, some big open interest, guys. 40,000 of the 420 puts. 40,000, 12,000. The 420 calls, no, I'm lying. 84,000. 84,000. So we got to pay attention to those. There's going to be a lot of spreads. There's a lot of action going on, and there's a lot of premium to be collected as well. So definitely pay attention to that. Look at this, the 425 calls, 100,000 open interest, till about the 430, 60,000 open interest. Damn. Worst case scenario, 400, right? 400, and we're looking at the 390s, baby. 390s, baby. 195,000 open interest. Very little volume, though. So this one we got to definitely pay attention to. 395, it might be cheap, you know, could spend about $8,000 to make over a crazy amount of money if you even touch the 400 levels. Let's check out the 380s. I want to see what this looks like. Oh, the 380s at 68,000. So those are key levels on the S&P right now in terms of support area that we're going to pay attention to. So, man, it's going to be a crazy month in June, right? We're supposed to have a nice rally at the beginning of June and a nice dip. So it's possibly about time you guys start hedging your portfolio really, 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 really well, right? We see what happened in September 2nd, 2020, October 16, 2020, January 4th, 2021, at the end of February, at the beginning of March, May, a little bit of a sell-off again before we actually closed. So it was about 5% sell-off. So you want to be extremely, extremely, extremely careful, right? When we're looking at the weekly here again, we're a little bit overextended. So it's creating some sort of a megaphone pattern, right? And this is a crazy rising wedge, guys. MACD or size overextended, volume is dying. So we want to actually, pay attention to our portfolio. Now, a lot of these companies have been reporting great earnings, right? The growth rates might be a little bit slower than, from the pandemic, but guidance has been on point. The market has every reason to keep continuing high up, but there's a lot of risk, like inflation and all that kind of stuff. Look at the 10-year from time to time. It will tell you a lot. And I think the 10-year is well above 1.6. Let's actually check CNBC real quick. We're going to keep this very, very simple. Market is green right now. Let's look at Asia. Nikkei, we're going to take a look at that. Let's look at the bonds 10-year. If interest rate goes up, the dollar goes up. We're gonna actually go over the dollar chart as well, because that might be signaling a pullback. Bear with me. I don't know why this is taking so much. Yep, we're above that 1.618%. The moment we break that 1.60% level, start getting worried for inflationary stock, especially tech stocks, right? Start paying attention to them, man. So, we have every reason to move higher, but we also have many, many reasons to move downwards. That robust growth that we've had ever since the lows of March 2020, right? We have a lot of reasons. The 10-year is moving higher. Now they're saying that, look what Yellen has said last week, right? That the market can actually handle it. The Fed could actually sit back and let inflation run a little bit higher to that 2 to 3% range and still be okay. Yellen made a statement about, this is nothing compared to what happened back in 2010, which I'll show you guys the message that she sent. Let's actually see that message. What she said, her exact words. This is her exact words. The government is operating like it's 2010, calls for more aggressive spending. A lot of printing. This is another bullish case of the market that it could actually run higher, especially with comments like this. So this is crazy. And we got Fed Powell speaking on Thursday or Wednesday. So that's another alley-oop that he might be throwing us. It's after the initial jobless claim numbers come out, which I'll be showing you guys. So I don't know if he's gonna say something. We might be printing more, or we have more liquidity, or that type of great stuff. So we got to pay attention to that. So I just showed you guys the 10-year, something to pay attention to. You know that we're supposed to have this nice dip in the middle of June, possibly around the 15 to 16, around the same time Biden is meeting with President Putin, right? So we got to pay attention to external factors that might be moving the market, so that you guys are not really surprised to it. Next, let's actually go to Bloomberg real quick, and let's actually go over the global market. So this is the Dow Jones S&P 1 month. The Nasdaq is still in the negative, but the Dow and the S&P is actually doing pretty well. Look at the year to date, man. Look at the year, 1 year, 36%, 38, 44, 40%, 29%. So we're doing pretty well. Let's look at the market all over the world. Look at the DAX, 33%. The DAX is actually leading the US by a couple of days or so. So we're gonna actually take a look at them. But look, man, 1 month they all green. Same thing with the Asian markets, they all green. So it's just like the net change in the weeklies might be a little bit different. But Asia, Europe, look at the DAX, look at the Nikkei, they all up above 30%, right? So are we, but I feel like we're a little bit late, especially with our economic growth being faster than them. Again, if we actually want to move higher, you're gonna need tech to actually come back, right? To have a risk-on market, we need tech to lead, right? So far, energy, financials, and a lot of other sectors has been causing this nice move up. We're gonna need tech to come back. So first thing first, let's actually look at the DAX real quick. Pay very close attention to it because it's highly correlated with our market, very influential. So just give me 1 second. Why is this thing moving so slow, guys? Why is this thing moving so slow? So we're looking at the DAX. I want to let the DAX index did the same thing that we did, but basically a couple of days later. Look on the daily real quick. We're high. All right. Lower high. Right? Nice bounce up the 50 twice. We did the double bottom. Same thing we did on ours as well. But what we actually do have here, let's actually turn this into a trend line. What we do have here, we do have this top to break higher, but at the same time, look at this, guys. Maybe we break down back to the 10-day, 15,292, right? But we're looking at a nice bullish ascending triangle, right? So we have tested about 3 times. As you guys can see, 1, came back down, 2, came back down, 3. You can have this move here. Could be the same for the could be the same for us. Or we could have this move down here, right? But based on this move here, this could actually go higher. I don't see the reason why not, right? I don't see the reason not to go higher. See the reason not to go higher. Let's look at the Nikkei daily chart. All right, so with the Nikkei daily chart, we do have the first thing first. We have a nice little gap to fill in here. You know what I'm saying? This is a nice little gap here, but this thing just been creating gaps all over. Let's look at it. Gap, gap, right? So it has a lot of gaps. So maybe we retest these highs and continue moving further higher than this, right? We establish nice little support here and we move higher, or we fill in that gap and we come back to this 200-day moving average here, right? So we're gonna know if these gaps are common gaps or breakaway gaps or very neutral gaps, because if it's a breakaway gap, we could actually start seeing this as pretty nice support, which is that 50-day, and we can continue even higher than this, right? So which actually put us in the same thing for our market. Give me a minute, XBX 500. Let's look at the futures right now. Yep, could be the same thing for us. Come a little bit higher, and we actually have that same pattern going on, looking to test these levels again. Nice ascending triangle, trying to test these levels. But this could be what I showed you guys in the seasonality chart, that move downward, right? At the beginning, this could be this move here, right? We rallied and then we continue going up again. So this is just temporarily that we might have a gap down and then push higher. Again, same story. This is, that ascending triangle, come back over here, then possibly keep testing these levels. Once, twice, third time, pop, or we come back to these levels here, right? Same thing for those who actually want to know those levels on the ETF, SPY. Same level we're looking over here. We have a nice gap to fill here. Do we break higher? We don't know. The week will tell. The month will tell. 423 got to break higher, but nice ascending triangle though. Nice bounce off the 50. Nice little double bottom, break higher. Now we're testing these sellers over here. There's probably a lot of people back holding too. So that's the reason why the moment they got back, they want to let go. So kind of pay attention to the volume and everything like that. And, we'll be all right. So let's actually go over, and there's like a more in-depth video that I make for my team that you guys could actually see. Just click the link, go to the website, join our group, and let's learn together, man. We've been trading for about 5 to 6 years. I learned a lot of lessons in the market, and find really true ways of becoming profitable of investing. Trading is not all about buying calls or buying puts. And people don't even understand the nature of these things. They just understand that buying calls means to go up, buying puts means to go down. But there are so many different, strategies you could do to lower the risk on your portfolio, to hedge your portfolio rather, especially in times of volatility. Great volatility in the market, to protect yourself and to actually get some consistent cash flow coming in. Everybody getting into trading for one reason, for longevity, growth, most importantly, to make money. So, you could be doing that the best way possible, very, very low risk, mitigate those risks, almost to nothing. That's what we thrive for to do in the market. So this is Monday, market close. Let's actually do a filter here. Let's actually put some, let's only load the USA real quick. Check out New Zealand. Just to kind of, and you guys, this is investing.com. All this information is free, guys. Take time to plan your trade. That's what I'll be doing tonight. And I'll be looking at 2 bars. And we want to leave this like this, apply. Boom. Now we get all US for the whole week. All right, so Monday, market's closed. So basically you have to pay attention to the UK German index, just to kind of see what news happening then, how could it potentially affect our market. But in terms of our market, we got the OPEC meeting tomorrow. We got our payroll numbers that comes out on Friday for the first week of the month. ISM numbers coming out on Tuesday, which is tomorrow. So we got to pay attention to that as well. It's not going to make a difference, really, to be honest with you. We got Powell speaking. Let's see. The big homie. So ISM numbers on Tuesday, Wednesday, FOMC, blah, blah, blah. Ooh, ADP, non-farm employment, initial jobless claim numbers. We actually hit the lowest since the pandemic. So this is gonna be pretty big. This might be moving our market a little bit. I'm not gonna lie to you. The non-farm productivity, I said non-manufacturing PMI numbers. You gotta pay attention to this. And look at this. Power speaks right after these numbers come out on Friday. That's the big homie. That's the big homie. Ooh, more spending, bullish market. We love that. Keep printing more cash. But on the long end, that benefits us as traders, as investors, as consumers. Those are the questions that we got to ask ourselves. Wow, Powell's actually speak on Friday. And we got the non-farm payroll numbers on Friday as well. And we get the unemployment rate. The labor market is gonna be crazy. So I mean, the beginning of June, we actually rally up. Mid-June, we fall down. So this is gonna be pretty big. We need more printing, bullish market, right? That's the only bullish case that I could see right now. The only bullish thing I could see right now. It's gonna be a pretty good week, guys. So pay attention to these numbers coming out. Any data around inflations. We did see, like I said, momentum and some tech and momentum stocks. We've been running. Let's look at a couple of ETFs right now. We look at the SPY. Let's look at QQQs. All right, on the weekly, let's look at QQQs. Well above the 50 on the daily. Nice little double bottom. I caught this whole entire move here, guys. This is why sometimes it's nice to chart your stuff. There's not a lot of things there, just moving averages, support, resistances. Just understand the key supply and demand area. Those are key support and resistance areas of where buyers and sellers comes in. Your 50 or 200-day, 100-day moving averages will show you where liquidity is in terms of where the big institution buying comes in, right? That's why those moving averages are all there, so use them. So right now, we did get this nice double top from here, came back down, we broke the 50-day on the daily, came back up, and now we're establishing above the 50-day. We need some more value, trying to see if we could test out 338, but literally right there, you know what I'm saying? We might as well. Either we do this and come back down back to over here. Who knows? We've been testing this thing. Let's see. We've been testing this thing. I think as far as the SPY, the QQQs has been on a nice rising wedge as well. So we're gonna look and see if we break that, 323 area, 318 could be pretty alarming. You might see the 300s on a nice little dip, which wouldn't be too bad for us. Let's look at the weekly. Oh yeah, we gotta pay attention to that, man. Got to pay attention to that, because this could be a nice little double top formation that we have here. Neckline literally at that 300 level, but we want to pay attention to that 323, right? If we break that, this could be dead. So please pay attention to that. Let's look at TNX. Look at the 10-year. Look at the 10-year daily. Ooh, can we get a nice little drop? Want to break above these levels here, and then we could possibly test that again. Okay, possibility. We break the 10, we break the 50. This is a 10-year treasury note yield. Break the 50, and you guys should know what that means, right? If the yield goes up, what happens to the dollar? Oh, while we on it, let's actually go over the dollar real quick. This is the dollar on the week. Let's see the weekly move on DXY. This is what I'm looking for. Nice falling wedge. This thing could actually have a nice pop, or still actually on a nice downtrend. So I'm looking for a pop above 91.50. right? 91.50, we have a nice little double bottom forming here. We'll see if this area can be that next leg of that double bottom. That's kind of like my prediction. We did see we break above 90, came back under 90. We're at 89.76 right now currently. So we see we are actually extending the loss into the trading session. So let's see if we actually build that strength to move higher. But I feel like this thing is actually waiting to bust out to the upside on a nice little move up. So let's actually see if this gets filled. This will be pretty interesting, right? This could be a nice little falling wedge happening here, and a break above, you know, these areas here will actually solidify the move to 91.20. 91.50 is my mark, right? 91.50 is my mark to actually go higher. 200 day is currently at what? 91.68. So very pay very close attention to that. Let's look at XLV. Look at the healthcare. Looking pretty bullish to me. Higher highs, lower high, higher lows. You know what I'm talking about. Determining uptrend, right? Look at this. Look at this. But if we break that, it's gonna be a nice falling wedge support after 50 days. Let's look at EEM, Emerging Index Fund. Look at the weeklies. Nice bull flag happening here. Nice little bull flag. I like that. A break above over here at 56 could be a nice one to the upside. Once we break above 56, we out of that bearish zone territory. Pay attention to that. You know, we could move a lot higher. Let's look at TLT. And you should understand the correlation. Check out chat room. I pay attention to that because I want to see when the pressure for technology companies are coming in. So you guys should understand the relationship in between those, right? Still on a downtrend so far, but nice little support on top of 50. Have much of a room to test, you know, over here. So you have to understand in the relationship between the bond price and the yield on that bond. So if the bond price goes up, what happened to the yield? If the yield goes up, what happens to the bond prices? Pay attention to that. Let's look at ARK real quick. Let's look at ARK. Woo. Man, this thing had quite a drop. We're still under our 200 day, so we might continue to the drop, base, drop. Look at the weekly. You're on that 50 day, so this could be a pretty good support area. Let's see. But true support could be around that 89 level. That wouldn't be a bad spot to come back into to find really good support and move higher. Let's look at the VIX. I mean, the VIX has been trending down and downward, so we ain't really got nothing to worry about. But just pay attention to these spikes, right? This is why we watch other factors in the market, just trying to determine when are they about to happen. If you look at it, from September 2nd, another spike happened in October. Another spike happened in where? January. Then another spike happened where? When was this spike? 13th of May. You know what I mean? So just kind of realize a pattern with it. So, you know, you could pay attention to it. Let's look at DIA. Give you guys a quick skew. Pretty bullish. Same thing with the SPY. Got it, but we have a nice gap to fill. But that falling star is key over here, so we got to pay attention to that. A nice little area of rejection here. But break above, very bullish, right? But one thing for sure, we did see descending or trending down in volume, so that could be like a what? A bearish divergence. So the market have every reason to run up, but so much more reason to go down because of that overall extension to the upside. So first thing first, two stocks that I'll be looking at because they have earnings this week. One of them is Zoom. I traded Zoom on Friday, entry was at 327. We actually had a nice run to about, let's see. We had a nice run from 327 till about 336, 32, and then retraces back. They have earnings. So of course, we want to look at the monthly chart. Zoom has been taking a beating, right? Due to a lot of people saying that this stock is not going to be around. It went crazy during the pandemic because of online schools and meetings for businesses and stuff like that, which affected the, the traveling trade, the reopening trade. And from 500 and some change, the stock had really taken a beating, right? We're looking at a drop over 50%. That was a 50% drop on Zoom. So we're looking to see this earnings. What are they gonna do? Right? What are they gonna do? What are they gonna do? One of the things that I'm looking for is actually to see paid subscribers. Did that grow? Did that fall down? I think they, renovating their business in a way that they will be around for some time to be, right? We saw Jamie Dimon, who said that he's tired of Zoom. That's fine. And even if people go back into the real world and go back into work, I think Zoom will play a very important role in this economy. And they actually, putting certain features out there to actually prove their existence, to prove their solidarity in the market. So I think investors will pay attention to the earnings call a lot, but everybody has a lot of reason to buy the stock. 50% discount, you know what I'm saying? But any type of bad numbers that comes out in terms of the earnings per share, in terms of the guidance, and you might see the stock take a nice hit. To be honest with you, possibly back down to 268, 257, worst case scenario. But everybody have more of a reason to pick up the stock here in this nice little downtrend. So the 4 hour, yeah. So this was a nice little bounce, man. I mean, I caught this bounce here. Sold over here at the 50, consolidated over the 50, just sold it over here on Friday. So let's actually see. This earnings play might be pretty good, but there are so many ways to take advantage. There are so many ways to take advantage of this. Excuse me, what just happened here? Second. Yeah, so this earning play might be, something to look at, but again, pay attention to it. You might catch this thing at a better discount. Palantir is on my radar. This thing has been moving quite very, 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 very nice. Again, we want to look at these things on the daily chart because we actually want to know where the bigger move is at. Where are we right now? We're right above the 50. Right above the 50. I don't like what that 10-day. We need that uptick move. Right, nice falling wedge. We did break that cup and handle round the bottom formation. Sold off about 60% from their highs. And now we're actually at a pretty good bargaining price. 17, 16 was a great entry point that we did. This is a great company to hold. So what I do is I collect premiums on it a lot. And and play a lot of cover calls, which actually bring down my cost basis. There's a lot of tax implications around there when you're doing a lot of cover calls as it brings down your averages. But again, tax is all Coleman's problem. My favorite baby, Jumia Technologies. Gotta pay attention to it. They're all doing the same thing, by the way. Jumia, all of them are doing the same thing, have that head and shoulder pattern, but they're looking to come back to actually disregard that whole entire pattern. Again, these has been dropping for quite some time. And momentum stocks, might be coming back again. So Junior Technologies above 30, really, really great buy. Again, use the option to actually reduce the risk, so that the money you put in, you're not bothered by it. Because that's what I do. This is just a suggestion. What else? Oh, PLUG. Plug. They're all doing the same thing, right? Above their 50 and 200 day to have that, death cross happening here, an uptick to the upside could actually make this thing move a lot higher. But of course, the June drop is right around the corner. Might be able to catch this thing at a 3 to 4, 5% discount more. So scale in, do your due diligence, understanding these companies. They're the next big thing, right? According to me, based on my research, based on my due diligence, want to pay attention to it. Next is looking at Netflix. Netflix, this is what I call the nice, this was a nice island reversal kind of breakout. Gap down, we're looking to fill in this gap. We've tried so many times, but buy above 515, great point. This was a nice target entry. Pick it up over here and ride this thing all the way up here, at least some nice money in the options. And also too, whenever stocks are consolidating so long in a certain range, man, you could get paid for your time. So understand these option strategies, especially like the calendar put spread, right? The credit put spreads. All those are great way to earn money, while stocks are consolidating, just understanding ranges. So this is what I'm keeping my eye on as well. What else I have on my list? QCOM. So QCOM had a nice gas to fill here, and it did that very, very well. Again, what do we realize? We realize a nice consolidation phase going on over here, right? So we're basically waiting to see if we can break above that 140 range. We could break that 140 range, then we could actually try to see if we could test these levels here. Right, we got gaps all over the place to fill, but I'm just looking at these plays for like premium collections. Look at these consolidation periods. They are very, very big. And for beginners in the market, why should you be risking buying calls and puts if you're not really very defined in technical analysis? Another big one that I like right now is actually TTD, Trade Desk. They actually had their earnings, and they actually did pretty good. Revenues as well, but your net income fell about 4 million year over year, I think, or quarter over quarter. And the stock announced a stock split of 10-for-1, I believe, by July 16. I've been buying a lot of those. I have about 30,000 into the trade right now, which after the split should give me about 1,000 shares for me to collect premiums on. So this is another one, nice island reversal breakout. We got filling this gap over here. We might be able to catch this thing at another 5 to 7% discount on the dip, but scaling very slowly. I like TTD, very established company, very great company as well. As you guys can see, this is a nice little dip here, from the highs until about these levels here. That's with a 50% dip. On earning, this thing dropped about 27% alone. So that was just, I just needed to buy this thing. You know what I mean? Like, it just had to happen. And then they announced the stock split. So this is something that you guys might want to look into, do your own research about it. What else do I got on my list? I'll share this thing over social media. I don't know why they say Intel. This is Twitter. All right, this is Twitter. This was a nice thing, and this level here is actually the 200. 50 on the weekly, 200 on the daily. Bam, 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 bam. Nice little bounce. Caught this. Actually send that shit over social media, man. So understand 50, 100, 200 day, where the stock is trading, understand the fundamentals. And when we talk about the fundamental, guys, we're not just talking about catalyst news that might be moving to like mergers and acquisition, a CEO step down, this person get on board. No, I'm talking understanding the numbers, crunching down the numbers. Everything comes from the numbers, understanding the financial statements, income, balance sheet, and cash flow statement, just understanding their expenses, their revenues, how much cash they're keeping on hand, how much cash are they burning, assets over liabilities. So understanding, crunching out on these numbers, right? Do your due diligence to see for the last fiscal 12 months, how this company's been performing for the last 6 months, for the last 3 months. Read those quarterly earnings, read those yearly earnings report. Right? That's how you're gonna get better at this thing. I mean, this is about it, man. Let me see what I got on my radar. This is about it. One thing for sure, this is just my way of looking at the market, but I will be shorting a lot of the reopening trade. So first one I started a nice little position with was actually Target. This is kind of like my depiction on it, especially with a bad market condition. We might be seeing Target giving back some nice little gains back into the 200 level area, right? We're literally at the overextended, it's like a megaphone. So I'm expecting to pull back at least to the top of 222, 224 area. If we break these levels, we come back into the median line of that linear regression, right? So at that point, so we're looking around like 220, worst case scenario, 215. 215 area, worst case scenario, 199. And that could be because, you know, of the drop that we're about to have. And a lot of people are still waiting for that 10 to 15% drop in the market, right? In the market. So we got to pay attention to that. If you guys look at the extension part of the linear regression, this could be an area of a reversal trend, right? This could be area for a reversal trend. So again, Target, another one is Home Depot, HD that I'm looking at for a nice little short. It actually started though. Caught this whole thing, came back to over here. We bounced pretty nice, but you can kind of see the RSI, you can kind of see the MACD and where volume is actually moving towards, right? And you can put it on the weekly charts. Again, go on to all the different sectors, right? My charts is very clean. Consolidation area, poop, come back down to the neckline of that breakout, then possibly run higher. This is what we might come back to, 289. So pay attention to these numbers. I'm gonna make money off of it. Can you? That's the question you gotta ask yourself. Look at all the 11 sectors. Look at the percentage change year to date. Look how much we've been up. Look at the mark on it right now, right? And find those companies within those sectors that has been outperforming. And in case of a pullback, you might want to give some back, right, to continue that healthy run to the upside. So this is it right now, guys. Let's actually check the video as the last one. Ooh, same thing. Well, this thing has a stock split. So this broke out of that ascending triangle, moving higher. This thing is moving really, really nice. Another one that y'all might want to look into is Amazon. Amazon been going through that hard consolidation, boy. Woo, hard. If we don't hold this, we might come back to over here. That could be another 5 to 6% discount. Right? This will be a nice little dip here, man. A nice little dip. We're looking at a 10% dip on Amazon back to 2,800. Then come back. Again, notice the divergences. Stop going up. MACD or SI been trending down on the weekly charts and the monthly charts. Okay, I'm not trying to scare anybody, but you know, when everybody gets too greedy, I get very selling side, and everybody get too selling side, I get very in the buying side. So it's just one of the things I've been using, and it's been helping, and especially if you got capital and you have cash, you're able to sit on certain trades and use certain option strategies to back it up, right, to accumulate that cash flow. This is about it. To end it, man, yeah, definitely got to pay attention to that. Again, this is where we at. We outside on this thing. We definitely outside. So this is where we at right now. This is where we at right now. We're looking, this is the beginning of June. My rally, come back down, rally again. Yeah. This might be a 395 area to 400. Okay. So you gotta pay attention to that, guys. So this is about it. Pay attention to power by the speed this week. Pay attention to the meeting on the 15th and the 16th. And that's supposed to be the point in which we top and we have this big drop. So definitely pay to it, because that's where Biden and President Point about to have their meeting whatsoever. And we want to see how the market reacts to that as well. This could actually be that external factor that drives the market down further. So this is it for this week. Again, guys, check out our website, MarketRushTrading.com. Check out Instagram at MarketRushTrading. And definitely, check our group out. Ask any questions, DM us, whatever it is. All right. So this is it. This is the breakdown of the week for the month. Do your due diligence. See you guys next time.
If you found this video informative, leave a like and comment below. For more videos like this, subscribe to our channel to get alerts when the next one comes out.